Let's start with Son. He's said to be still talking about taking his company private, but it might happen over a year in sort of a slow burn style buyout. Tell us more about what we know.
You know, this idea of a management buyout has been around for at least 5 years that we've been tracking it, but it sort of gained real currency this year. And what's new with the report today is as this so-called slow motion buyout, the key number here would be 66. So in other words, 66% ownership by Masayoshi Son will effectively give him the ability to squeeze out the remaining shareholders without ever having to go out there making an announcement and having to pay a premium, which we expect would be as much as 25%, the old-fashioned way. What also plays in his advantage is that the Japanese disclosure laws are fairly gray zone when it comes to things like that. Short of taking concrete steps like setting up a special committee or getting letters of intent from the lenders for a buyout, Son actually doesn't have to go out and say anything. So that gives him the advantage of being flexible to buy back shares when they're dip and, you know, sit back when the shares are rising. And at the end of the day, if he feels that he has enough to take his company private, he can make that move. Although, of course, judging by the way shares pop today, there are definitely some problems with the strategy.
Yes, so you set out some of the advantages, Pavel. What are the challenges, then, of taking this approach?
Well, you know, for starters, there are many opponents to the very idea of going private. A lot of people internally believe that staying public will keep Masa's worst impulses in check. It's also a whole lot of money, and having spent all their cash on going private, someone might not have enough cash for another year and a half to do deals, which is really what he wants to do. And people also point out that it's not clear if he can buy back enough shares without driving up the price of the eventual buyout. You know, Son owns about 27%, and after a whole year of buyout share repurchasing, SoftBank only holds 12%. So put together, that's still a long way to go until 66%.
I mean, this has been tried before, recently, in fact, back in March, Masa tried an MBO. How come things are different now, or how are they different?
You're right. This March might have been the closest he ever come to pulling this off. At that time, the market cap of SoftBank about just a third of the total value of its shareholders. He had Elliott Management, Mubadala investments on his side. The problem is he could not convince the banks to foot the remainder of the bill. Now, what's changed since then is that SoftBank is now arguably a much more attractive lending target, in part because he announced a $43 billion asset sell-off, you know, paid down a whole lot of debt, already bought back more than yen 1 trillion, you know. So all in all, Son says as recently as November, he said he's sitting on about $80 billion in cash, and that dramatically changes the picture. And with that much ammunition at his disposal, there's a good reason why investors should be taking these MBO discussions seriously.